historical cost accounting couldn't have captured it. So therefore, while we prepare for using historical accounting methods equally for corporate reporting, decision making, and significant impact from our corporate reporting, we must ensure that futuristic events, both macro and micro, are considered when we are reporting to the stakeholders. Hello there. I want to look at why corporate reporting does not rely only on historical information. Like we all know, historical information is what corporate reporting and financial statements is based on. But nevertheless, if we rely on it alone, it has a way of distorting the truth about the health of an organization. Without further ado, we are going into it right away. So, we are going to consider some of the few things that future could hold for an organization, and if we rely alone on the figures, it's going to affect the interpretation of the financials. Take, for example, historical will not tell us that liquidation is coming for a major customer or client. And corporate reporting needs to put it in view, and the board needs to consider it and how it's going to impact the future cash flow. But if this narrative is not known and not captured, because we rely solely on historical figure for the financial preparation, statement preparation, at the end of the day, the effects and the impact of liquidation of major customer is not prepared for by that organization. Natural disaster too could affect a branch, especially on the distribution value chain. And if we cannot get our goods and services to a particular region that we are selling to, or natural disaster actually affect our production, is going to affect at the end of the day the sales. We could not foresee regulatory changes that may happen, and historical accounting is defects of consideration of this. And that is why all these that I'm mentioning are usually put in the notes to the accounts. And IFRS require that we, as much as possible, disclose what we know and what may affect our organization. Technological disruption is known by everybody, right? Everything keeps changing every now and then, and an organization must be prepared for. This will not be captured by an historical information in the financial statement. Economic downturn all over the world now. Stocks are nosediving recently. Trump is triumphing over so many things, and we don't know how far and what next is going to lay his hand on. So all these macroeconomics can affect adversely an organization, and historical financial statements alone will not do. Pandemic came, affected everybody, every business all over the world, and historical cost accounting couldn't have captured it. So therefore, while we prepare for using historical accounting methods equally for corporate reporting, decision making, and significant impact from our corporate reporting, we must ensure that futuristic events, both macro and micro, are considered when we are reporting to the stakeholders.